Welcome back to the Neuro Finance Masterclass. Today is an absolute milestone, day 47 of our 365 Days to Financial Freedom series. And our core theme today is asset allocation and portfolio shock absorbers. Now, over the past few weeks, we've systematically built this incredible offensive machine. We've handpicked elite companies, we've successfully dodged value traps, and we've locked in some really reliable dividend growth. Basically, you've been playing fantastic offense. But today, well, the architect needs to shift gears. Today, we're focusing heavily on your portfolio's defense. Because look, building wealth is really only half the equation. Keeping it is the other. It's time to master asset allocation and build a genuinely bulletproof portfolio.
So let me ask you a serious question. Are you driving at 200 miles per hour without a seatbelt? Because honestly, if 100% of your wealth is just sitting out there in the stock market right now, you're essentially driving a high-performance race car at top speed with absolutely zero safety constraints. Sure, it feels incredibly exhilarating on the straightaways during a massive bull run, but what actually happens when you hit a sudden blind curve? A portfolio that is 100% stocks is simply too volatile, too exposed, and way too dangerous for most people to maintain without risking a catastrophic loss. When the road inevitably gets rough, all that speed turns into a lethal liability.
Section 1. The Glass Cannon Portfolio. Now, what's really interesting about this concept is the extreme contrast. While we absolutely need to celebrate our past success in locking down dividend growth and finding those elite offensive plays, we also have to issue a really strong warning about the fragility of what we call the glass cannon. Think about it. A naked stock portfolio, one with literally zero defensive layers, is an absolute powerhouse during an economic boom. It packs an immense punch. It compounds, it grows, it accelerates like crazy. But during a crash, that exact same portfolio shatters completely. The very momentum that made it so powerful is exactly what makes it devastatingly fragile when the market floor drops out. Just think back to the terrifying initial weeks of 2020 or the massive collapse of 2008. The pure aggression that built your wealth is exactly what destroys it when the macroeconomic environment suddenly flips. Section 2. Financial shock absorbers. Listen, as the architect of your own wealth, you simply cannot rely on hope as a risk management strategy. We need a deeply authoritative, highly mechanical solution to portfolio defense. We need to actually engineer safety right into the framework of your wealth. Let's ground this in a physical reality we all understand. Think about the difference between these two physical experiences. You drive over a massive, unexpected pothole in a cheap, stripped-down car. The impact is violent, right? You literally feel like you're going to break your spine. But what if you drive over that exact same pothole at the exact same speed in a heavily engineered luxury SUV? You barely even spill your morning coffee. The pothole hasn't changed, the road is exactly the same. So what's the fundamental difference? It's the mechanical shock absorbers. So the crucial point is this: Wall Street actually builds financial shock absorbers using this exact same mechanical strategy to protect billions in capital. We call it asset allocation. And this basically means deliberately mixing completely different types of investments that behave completely differently from one another. You aren't just buying different stocks, you're buying entirely different vehicles of value. By weaving these different asset classes together, you're literally building a premium suspension system for your life savings.
Section 3. Non-Correlated Assets. Holding these specific types of assets is the absolute undisputed secret to constructing a bulletproof portfolio. We're talking about non-correlated assets. Now sure, it's a mathematical term, but the concept is incredibly straightforward. It simply means that when asset A goes down, asset B either stays perfectly flat or, even better, it actually goes up. They do not move in tandem. They are completely untethered from one another. It's kind of like a business selling both umbrellas and sunscreen, right? No matter what the weather does, one of your assets is thriving. You are mathematically insulated against a single point of failure.
Imagine strategically dividing your wealth like this. Say 60% in stocks, 30% in government bonds, and 10% in physical gold. Now, when the stock market inevitably crashes and causes a global panic, average investors are absolutely terrified. So what do? They flee to safety. They dump their stocks and they aggressively buy up government bonds or physical gold. Now, if you only own stocks, you bleed heavily. But if you own this specific mix, if you've allocated your capital properly, the crash in your stock slice is actively cushioned by the sudden dramatic rise in your safe haven assets. We saw this exact dynamic play out during the Great Financial Crisis. As equities completely plummeted, safe haven bonds spiked, which effectively offset massive portions of the equity losses. So the panic of others actually ends up inflating the value of your defense.
Section 4. Smoothing out the ride. Let's see how this builds in a real-world scenario. Imagine a 50% drop. This is the terrifying, gut-wrenching volatility of a naked stock portfolio during a major market correction. Seeing literally half of your life's wealth just evaporate into thin air, that causes massive, blinding psychological panic. It is an incredibly difficult thing for anyone to endure without acting completely irrationally. Now, it's really vital to clarify here. Proper asset allocation does not mean you're going to experience zero losses. That's just a myth. What it actually means is that you deliberately engineer a far safer ride through this inevitable turbulence, specifically so you don't panic.
Now, immediately juxtapose that pure terror with a highly manageable 15% drop. Because you held non-correlated assets, your bonds and your gold, completely absorbed that massive blow from your stocks. Your luxury SUV hit the pothole and the suspension did exactly what it was engineered to do. A 15% drop? That is entirely survivable. It's just a temporary dip, not some life-altering crisis that keeps you awake at night staring at the ceiling. This level of proper asset allocation provides priceless psychological protection, ultimately guarding you against your own worst instincts.
And frankly, that psychological protection is exactly what keeps you from making a fatal error. I really need to warn you about this. Without a smoothed-out ride, without those shock absorbers firmly in place, you are highly susceptible to making the ultimate amateur mistake. And that is selling absolutely everything in total fear at the exact bottom of the market. When the pain of that negative 50% becomes just too much to bear, people capitulate. They lock in their devastating losses right before the historic recovery even begins. All right, so here is today's cognitive task for you, the architect. I want you to look at all of your investments and take immediate, decisive action. Step 1, audit your defense systems immediately. Literally, open up your accounts and pull up your portfolio. Step 2, check for 100% correlation. Are all of your investments moving in the exact same direction? And step 3, allocate your capital to reinforce the structure. Start moving funds into defensive, non-correlated assets and actively build your suspension system. I want to conclude this explainer by leaving you with a really provocative question, something you need to honestly answer for yourself. If the stock market crashes tomorrow morning, will every single thing you own crash right along with it? If your honest answer is yes, then you are driving at 200 miles per hour entirely without shock absorbers. It's time to fix the vehicle before you hit that inevitable pothole. Thanks so much for joining this explainer for day 47. Now let's get to work on your defense.